Hello guys, welcome to the Trading Parrot and to another episode of the Sunday Alpha. In our past episode, last Sunday, we were talking about a dead cat bounce into 107k, 106k. It took until Tuesday to form fully the dead cat bounce into the resistance, which managed to reach the full technical target of 100k. But right after that, the bulls step in to defend that psychological level of 100k, of course. What I wasn't expecting is this intensity, and in today's video we're gonna focus on how many things are flipping thanks to this intense bounce from 100k, particularly on the weekly close, some revealing signals that I want to share with you. In today's video, of course, as with every single Sunday Alpha, we go deeper into the rabbit hole. We look into general markets, altcoins in general. We look into some news, so make sure that you're holding already your pint or your cup of coffee and get ready for some unique alpha across all YouTube channels. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And yes, after hitting the dead cat bounce and then going to the first target of 100k, can we get 1,000 likes? That will be phenomenal to show this calls to a lot more people and help me grow in the channel as well. Win-win. Alright, let's start Sunday looking at Google Trends. Let's see what is the attention at the moment of retail. And you can see that Bitcoin has gone back into the lows of attention. We're not gonna say that this is interesting because it's been pretty much the usual behavior of retail throughout this whole cycle. We reach a top, people take some profits, and then everything goes back into quiet until we get a pullback, and then there is attention again, and the cycle repeats. What's surprising me this morning is how little attention we have in the altcoins. We're going into 13. It's an intra-candle reading. It needs to settle, probably is going to settle a bit higher than this, definitely, but you can see that 13% hasn't been seen like that since pretty much early 2023, 2 years ago. So it doesn't get more quiet than this, and that is not necessarily something bad, because it's usually from areas like this where we start seeing a bounce. And in this case, I'm talking about the altcoins because Bitcoin is already in a pretty good state, sitting above 100k. And looking at my Twitter timeline, I can see that the whole arm wrestling between Elon Musk and Trump kind of went quiet now. It really helped that they both decided to delete all their tweets. Some people even speculate that the whole thing was planned. Well, I have no clue. For me, it was just the perfect hit that I needed to hit the technical target and to take profit from my short at 101k. That was beautiful. So thanks, Trump, for that. Let's have a look at some tweets. Actually, there's some very interesting ones. Kevin is saying, I don't think people realize that Bitcoin just completed its most significant retest at 100k, and it held it. It's the first time we've dropped minus 10% into 100k zone and immediately turned into a new support. What I have to say about this is, sure, the bounce was intense, and we're gonna look into what are the implications for that. It's got very positive implications on the weekly. More of that later in the video. Remember that there are timestamps everywhere. So before you start writing, oh, this video is too long, I have no time to do this, I'm too drunk, or whatever, just go to the description and go straight into what matters to you. I think claiming that 100k is the new floor, it's a little bit too early. Of course, it's absolutely possible, but I wouldn't say we're necessarily guaranteeing that. We're going to talk about this selling wall that there is at around 107k, and we are having a pump over a weekend. We are producing a fourth CME gap. I mean, we need to be realistic, and I'm not meaning realistic that we have to break 100k. Realistic in the sense of there are some forces on both sides. It's gonna be an interesting battle. I think that's different to saying it's a major bullish signal. We reclaim 100k, we are ready to go. We'll talk about the breakout as well. There is a breakout yesterday that I call out in my Patreon community. I made you aware as well that I don't necessarily trust it that much. If you want to be part of my Patreon community, the link is in the description. For $10 a month, you get all the summaries of the articles in your email, and you get to join the coolest community where finally you are not the product. And Titan of Krypton is saying that Bitcoin breakout just happened. We'll look into this breakout. I think we noticed around the same time, a little bit earlier possibly, because we were looking at the RSI. This was posted yesterday at 5 p.m. And the way that they are targeting this breakout is by considering the whole move the handle of the flag, which is a very extreme way of targeting something because, we could say that the flag just starts from 92 and be a bit more conservative. But in this case, since this was the first real pullback, well, we are kind of forced to use the whole thing. And that is pointing to 137K. We also have Bitcoin Data 21 saying first time we see 2 days of negative funding rates near Bitcoin range highs, which is rare. I noticed that a couple of days ago in one of our videos, we were saying, well, we are having funding rates negative and the price was moving up. So people tend to short a lot the price when we are at the range lows and the funding rate goes negative and then immediately the price bounces back up. It's different when this happens on the range highs. That means that people are trying to short the pump. And we're going to look at the order book and see who the hell is doing that and with how much liquidity they're using really to contain the break beyond 107K. Across all the news that I can see here in Cointelegraph, including the hot stories on the right-hand side, I'm just interested on this one. Is a Bitcoin price rally to 150K possible by year end? And after reading the article, this is kind of a collection of different people's forecasts, including some of them that are actually pretty bearish. For example, in the summary, it says a bearish RSI divergence similar to 2021 suggests Bitcoin could face a 50% correction towards 64K, challenging the 150 year-end target. The key takeaway is, well, the 2021. Peter Brandt warns Bitcoin must reclaim its parabolic trendline soon or risk ending its bull cycle before reaching the 150K target. We can see how it's identifying this pattern. Remember, we were talking about a head and shoulder. I want to claim credit on that as well. I made you aware that all these bearish patterns throughout the whole rally from 74 into the top, 90% have faken out. They go and they just produce a liquidity hand. And if you pay attention to the support at 100K, you can see on the right hand side that we pinch below the previous low. We put a new low and we reclaim aggressively. That is what the market maker has been doing in all this range. So now that we see the pattern is bearish, but we are at the highs. Are we going to break this bearish pattern and carry on to the upside? Or are we going to come back and retest that 100K a second time this week? We'll see. And here are some fractals that are also highlighted in the same article. It's funny because we keep looking at these fractals all the time. And sometimes my paranoia tells me that people are copying my patterns. But anyways, some of these dudes have hundreds of thousands of followers, and maybe one of you guys are leaking my thesis into these dudes that then end up taking the credit. Anyways, maybe they are also clever people and they find things too. We are not the only intelligent people in the planet, luckily. So Peter Brandt continues looking at all the flags in here. I also follow Axel Adler, and he's pointing out that we are in an area where usually we restart an impulsive move. This is based on the Bitcoin Composite Index, and actually it's him, the one that is still with the hopes of 150K. Peter is saying the opposite, that we are risking to break below with a 50% correction. And on June 4th, this is just 4 days ago, there was some unusual inflows of 12,000. Prior to that, we have tens of thousands of outflows, and I think we managed to find out some of that going into some new investments from institutions and changing hands, but not necessarily really large wealths trying to sell. So pretty much we have on the 27th of May 34K of inflows, which is bearish. Then we have 17,000 of outflows, which is bullish, and today we are having 16,000 again of inflows. So things are just going back and forward, and I think this is just exchanging from one exchange to the other and then to finally sending it into a wallet. But this is an inflow, so this is bearish what we are seeing today. I have the feeling that we have to a little bit ignore what's going on in here due to so many companies exchanging hands at the moment. Here's the Patreon heads up I gave to my community around 20 hours ago, and I also asked for what do you want me to cover in today's video, and I'm gonna cover a couple of these questions that I know the answer later in the video. So here is the breakout on the 4 hour. You can see that there is a trend line on the price that broke out, so retail is already aware. RSI broke out when the price was still against resistance at 105. You can see RSI breaking out around 10 a.m. yesterday. Since then, it's just going sideways. There is a bearish order block right there at 107, and market maker is well aware of that. That's why these bastards have a massive selling wall in here right above the price up until 107.4. They have placed some support at 104. You can see it in here with 2 bands. 3 bands, we could say, pretty intense. So pretty much we are expecting a little bit more sideways in here thanks to all the compression of these 2 sides. And to be honest, I don't mind that. I just don't want the pump to carry on too much higher because that's going to make things a lot more critical for producing a CME gap. And let's go into the CME chart and let's have a look at where we closed. On premium, we closed at 105.2, but that on Binance is 104.5. I always forget, but I need to look one candle before, so it's 104.2, the Binance closing price at the time CME was closing. And price now is over 1K above that. So we are producing a decent CME gap unless in the first hours of Sunday, we come back and we close it. We need to go to close it into 104.2, which is located more or less around the order block bullish that we have in here. So let's do the trick with the RSI reverse, and you can see that in order to get to 104.2, RSI needs to go to 45. If we go to 45, we are basically as low as this, and we are coming back in the previous range of the RSI. So watch out for that, because we have some fuel to bring the price to an area where the RSI draws a fake out, right? The RSI will look more or less like this. So just a yellow warning. The second warning on the 4-hour time frame is all the fair value gaps that we have in here. The move once again was very pumpy with no pullbacks, and we left 1, 2, 3, 4, 5, and we have 6 more or less fair value gaps below the price. And that again is liquidity that is attractive for the price to close imbalances. So let's go into the Bitcoin status and let's start with the 4-hour, wrapping up what's going on in the 4-hour. Dead cat bounce completed. Yep, dead cat bounce completed. Technical target achieved. Last week, job done. We need a higher high. Do we? Yeah, we need. This is our current high. The structure on the 4-hour is not bullish regardless of this breakout unless we take 107. So we are in the same place as the past week. We need to break 107, that stupid level, and they know that. That's why they are defending it. Look, 600, 500, 1000, 500, 600, 500, 400. It's a heck of a lot of liquidity defending anything that gets close to 107. And that doesn't necessarily doesn't make it impossible. It's just meaning that they want to either delay it, keep the price there for some other reason, or they know something. And of course, the third scenario, which is they eventually say, okay, are we ready for the pump? And they remove that resistance and you start pumping. But so far, it looks very heavy. I mentioned RSI and price breakout is there, it's happening. Leverage squeeze buy. Oh, you didn't watch my videos during the week. What the hell were you doing? I publish this signal of leverage squeeze on all social media, Telegram, Instagram, and Twitter. And it works like a charm, the whole cycle. If you want to get this indicator and set alerts so you don't have to read my timeline and get annoyed with my stupid comments, you can just go to my Patreon and get it either by Telegram charts or by Pine scripts. Yeah, you can get it on Telegram charts. If you go to my Telegram channel, and you hit TTP charts, you're gonna see the chart right here. You can call it whenever you want. You don't need a TradingView subscription or anything. CPR pivots, potential reclaim. Let's go to CPR chart. Yeah, we were losing the CPR pivots of the month of June. We close below it, we reclaim it, and we put new candles above it. So this was a complete fake out to the downside from the point of view of the model CPR. Being below the pivots was calling for a test of 94,572, and so far we are back to where we started, holding that as support. So you might say, why don't you turn it into green? We have a breakout, we have leverage squeeze, we reclaim the CPR pivots, dead cat bounce is out of the way and all of that. Well, the reason is the structure of the price still needs the higher high. We don't have that. We need to break 107 and punch in the face all those orders for selling that are right there. We are pumping on a weekend against that selling wall. We have fair value gaps below all over the place. 6 of them, not just one, 6. And we are forming a CME gap below the price of over 1K. So, can I put it in green? No, the odds are kind of balancing out the new bullishness with the new bearish signals on the 4-hour. It's favoring a little bit of sideways with potentially closing that CME gap over the weekend. That is kind of the how does it feel for the next couple of days. Let's go to the daily. I promise you, this is the Sunday alpha and we're gonna go through all the alpha. We still need to go to general markets and altcoins. Daily, how is it looking? We look at the range in here and we are still below this. By now, we are putting the 10th day below the resistance to exit the trading range. We already broke out and we are again back inside that range. That is not bullish for the daily unless we invalidate that by breaking beyond 106K. Have we done that? No, 10 days we cannot do it and we are putting new lows. The structure is lower low, lower high on the daily, and we are for the first time attempting to put a daily beyond 106 so the daily time frame can finally have a higher high, not a higher low yet. We are too early for that. And if we see a rejection on 106, a second rejection in here, we could be taking the low and challenging 100K once again. So all eyes on that. Now, I have replaced on the daily all my levels of support and resistance. I have finally decided to place my pivot line around here, and I place support at 43 at this point because we have on the daily, thanks to moving this line, finally settling it, there is a daily breakout too. So 43 is the support, break that, and you go to 25. Notice that this 43 has been moved. So I've been cheating while you've been away. I had the green line like this, and I move it to here because I have to respect the reclaim. So I'm gonna tell you some sexy levels on Sunday morning. Are you ready for that? First, the 43, that is the immediate support. The break it and go to hell 25 level. And we have on the top the 77, which is the percentile highest level that we can reach according to that model. And we have a higher, even higher, 85 level, which is the take me to heaven kind of level on the daily RSI. This is the whole stupid cycle, the most hated one, with every single pump that we did against the top of the RSI with declining momentum levels, 1, 2, 3, 4, and if we get finally a 5, this fifth one in here reached 78 and it left us dry. If we get into 85, that will be really appreciated by everybody. Let's look at where are those levels in the chart. So immediate support, as I say, 101.4. Not very clever, right? So it's just the previous low. RSI is telling us, go back there and you're testing support again. Good. Go to hell level 87.3. That means lose this 101 and we get the whole narrative to go to the bottom of the range. Are you crazy? What kind of TA is this? Well, that's what we did in 2, right? So volume profile is traded this way. You break out, you lose the breakout, and you earn yourself a trip to the bottom of the range. Best case scenario, just to the point of control at 96.5. But the story says that you go to 87. And that's how important it is to defend 101 and to continue battling 106. So I have the daily in red because of that. We haven't broken that. Hopefully we do it. Ideally not on a weekend, but hey, I don't get to write the rules. I just observe them and repeat them forever. Lower low form, yeah, true. 10-day below that range, true. Testing reclaim of the range top, that's what we are doing now. And the MACD is flipping back above zero line. Let's look at that. You can see that we are kind of cooling off with the momentum to the downside, potentially getting at some point this week a bullish cross. We'll see. Weekly really looks amazing. We have done 1, 2, and this could be the third retest of 104.5. We talk about the whole week about defending that level. We've been below it at 100K and we managed to reclaim it. Why is that important? Because that's the highest close in the previous range, and if this is a breakout, it must confirm that we hold it. Otherwise, we're gonna go into the bull market support band or into the middle of the range or into the bottom of the range, which is 80 for the weekly. Last week we put a stochastic bear cross in here and it had some effect, but we are still ranging, still not doing a massive breakdown. On spot ETFs this week, there's been a lot of red, I will say. 2 days it was in the green, and then Thursday and Friday were again into the red. Interesting that there is red coming from BlackRock as well, particularly on Friday there was a sell for 130. Whereas with Ethereum, you can see that it's all in the green day by day, and that is surprising many analysts that are getting bullish now with Ethereum. Fear and greed is at 62. We've been around the 50s at some point during the week. We still don't get the sell signal on Cerberus, so no news on that. And let's go into liquidity. Here is gonna get interesting for those of you that love swing trading and scalping, because I noticed that if we remove 10 and 25x's and we just stick with the full degen ones, 50x's to 100x, you can see that at 107 there is a pretty decent liquidation level of those dudes. So here's the narrative. Regardless of direction or final direction, whether we go to an all-time high or we go to 80k, there is this served on the table. So if price wanted really to go back to test 100k, it is finding uncomfortable to wear these dudes that are too high leverage to move down. So that is the narrative. So if we are bearish, it's actually good to get rid of them before breaking 101k. Now, if you're bullish and you're thinking an all-time high is coming, well, this is gonna help too. So this is kind of a Swiss knife, you know, it helps for both setups. You wanna go lower, well, get rid of the stupid 50 to 100x's and to go up too. Now let's bring in those 25x's. And we can see that we are living at 100k.4 more or less, a pretty decent level as well, that if you want to go higher, it might get a little bit itchy to keep them on your back when you need to be running. And if you look at 10x's, which are associated with better traders, sorry, no offense, but people that survive in the market tend to use less leverage. If that hurts, you can write down a comment down below. But here you can see 100k, we have the combination of all sort of personalities. And at the top, we have from 112 to 114, that heaviness from the 10x's that started shorting when we were at 112 on the all-time high. And the last week, I left this drawing, which is the evidence that I have to prove that at some point I say we can form the head and shoulder, but watch out with this scenario. You go, you take the yellow, you reclaim, and then you go into the red. And I sustain that idea that can happen, but of course it's never that easy. So we have this selling wall on 107. We need to take care of that. We need to take care of whatever CME gap we formed this weekend. And if we come back and we take that line in the sand at 101 that I just show you on the daily, then we get the chance to still make the head and shoulder play out. I think we're just ranging in this right shoulder and no decision has been made, although it looks pretty promising that we reclaim after pinching a new low. This is how it looks, the liquidation heat map. That 107 stands out right there if you haven't seen it. It's also evident that it's the highest level on the past 30 days. So 107 seems to be a low-hanging fruit. Another alpha for this Sunday is this massive green block of liquidations, the highest in the past month. And typically things balance out to the opposite. So after you get longs liquidated big, you tend to get at some point a big short liquidation coming in. This is how it looks, the chart on FAR charts. You can see how they defended 100K with a lot of liquidity right there. We have some defense that is showing at 107. I don't think this is showing everything. There's just 20s and 10s. But on Trading Light and on Market Monkey Terminal, it shows a lot more. So something is failing to load here. Purple whales remain just flat for the weekend. They are not really looking for much stress. And the brown whales kind of did what they needed to do prior to the weekend, and now they're just going sideways too. So I'm gonna zoom out a little bit more so you can see the selling wall, how it's developing. As we reach 107, they started insisting to contain that level. And now that we came back from 100K, they left the wall there, but I will say that they flipped the higher end into very close to the price, and you can see how they place all of this right there at 106. They really didn't want 106 to carry on. And it's very surprising because after a V recovery in a breakout, placing all your bets against that, it means that they really don't want the breakout to succeed. Market Monkey Terminal is showing me in the left-right side the combination of all these exchanges, but on the right-hand side you can only see Binance on USDTM accounts, and there is 106 with decent liquidity. That's the selling wall, and the buying wall is placed currently at 103.9. Let's look at the bid versus ask ratios to see how intense is this. And I'm using the 5% order depth, and you can see that we are at 0.04. There's been tons of sell wall all the way up, and I speculate that they enter into those shorts. How do I know that? Because I've seen the funding rates going in the negative all the way we are going up. It's tons of shorts. Interestingly, as we reach the top of 105.6, there's been a spike in amount of leverage, not just amount of leverage. The leverage that they are using is just very degen. It goes in green every time that the average leverage being used is above 15x, and they enter with 15x like mental at 105.4. That is not great for them. That tends to build tops. So that is one data point that we need to put on the table as well. The selling wall is definitely still there. And if we look at this history here and we focus on all the different types of order depths, 10% away from the price, 1%, 2%, 5%. So all this top end of the chart shows very dark areas. That means that they are not defending the price from the low end. It's the opposite. They are defending it from going higher at the moment. That can change on market open with some positiveness and anything like that. But so far we are in a period where they want to short the market. Let's look at the liquidation levels. The delta is 28K, so it's flat, no alpha there. Fair value gaps as we approach the week. We have these two dudes in here that are the recipe to come back and retest 100K again, and also to turn this into a fake out if we go there. If we don't go there, if we decide to actually go and break 107, we have the recipe for all-time high. I will say if we go to 107.6 and we turn 107 into new support, that is massive, guys, massive. And I'm glad I'm not in a short if we go for that task. If I wanted to enter into a short, I'm gonna do it from a different level. For a long, if we were to come into the 100Ks and we put a higher low and we show strength at this area, it's a different story than putting a new low. Then I will be interested in a long. If that fails, I will love a long in the middle of the 90s. And you're welcome to write down, keep hoping for that, because I think it's very difficult, particularly if we break 107, we need to say bye-bye 90. All right, this is gonna be the best alpha of the weekend. I'm gonna talk about the top, bottom, and this model on the top end, finding tops, has never failed in the whole history of Bitcoin. It's one of those models that are not well known, but work a lot better than many models out there. Sorry to break some egos, but yeah, this is better. And you can see how many times we reach the top of this triangle. This is the volatility of Bitcoin on the weekly using this free indicator that I built probably 3 or 4 years ago. And we are in the middle end. So the question that one of my Patreon members was asking, can you do an update on this? Are we going to get to the top, and where is that in the price? So let's say this goes back into the top line and we reach, let's say 29 at that point. Then we go into the chart and we change this from 0.5 to 29, as simple as that. And that gives us a price of 127, give or take. If we do it just straight up now, that is our ceiling. So does that mean that that is the maximum we can reach in this cycle? Absolutely not. As you can see, in many cycles, you can hit the top band multiple times, and we have already reached it at 73. We almost did end of November last year. And if we did it again at 0.5, we get into 155. I will say we cannot get straight away into 155 from where we are. From this place, we cannot project the price that high. We need pullback to be able to do that. That is the trick of the price. You create a spring from a lower area, suddenly there is something bullish narrative and you hit 180, but from lower. So you can go and hit 127, get a decent correction into 80K, and by year end in October, maybe if you hit the band again at 24, that could be 180K. You know, that kind of way this thing works. So you got your answer, and let's look at general markets. Second question from Patreon was, are we gonna see higher prices on the S&P and the Nasdaq, given that there is some sort of breakout on the weekly that we have to admit? Well, before I answer that question, let's do the overall look at all the indexes, including dollar and gold. So the RSI on the dollar still doesn't put a new low, so it's still in a healthy breakout, although the price is having a drama here at the lows, but that can still build a double bottom for the gold and then hit the highs of 105. If we take the lows of 99 with the weekly closes, then I'm happy to say, well, it was a fake out. Let's move on. Gold still looks in here like it's in a distribution. It's a bull flag. It wants to break out. We had the highest close a couple of weeks ago, but you can see that gold failed to do something this week that was almost about to do in the middle of the week, which is a breakout from here, from the level of support of 65. We close at resistance, so there is no decision on gold. If we had a breakout, we will be bullish. If next week we create a pivot and we break the 65, we are bearish. And the target is for the gold to go to the 21 weekly. If next week we break out and we manage to do what this week we couldn't do, then we are bullish and we are start targeting higher prices. Our revenge rally into 83 could be possible. Let me see where is that in the price. So in terms of price, if we reach 83, that puts gold at 4.170, which is crazy. That's almost 1K above, but that is a revenge rally after this reset. So hold 65 and it could be really massive. Break it and, well, 21 weekly is just there at 3K. We might visit as well, slightly below 3K as well after this close below resistance. Volatility index, it's right there still at support, just like Nasdaq and S&P are right there at resistance and doing a very shallow breakout. The volatility, which is the counterpart, is at support. And what is Bitcoin doing? I was wondering this morning every time that the VIX is at support. Well, one thing I know is if the volatility index is at the top, Bitcoin will have correct, right? Each and every high in here is a correction that Bitcoin did. So what is the bottom? The bottom is around a top 90% of the time, and 10% of the time is within an ongoing rally. Examples in here, we were reaching 30K from the bottom of the bear market, 15K. Next bottom of here, we will have rally from 20s into 47. Next one here, 42. We were at the highs of 73.5. We reach a top. We spent 8 months after that. Next high, another high within the same megaphone pattern. This high in here, this next low is the previous all-time high of 103 or 104. And now that that we're reaching this, we're pinching 112. So the model says that we should get a correction based on that. But of course, we could also be in that 10% where we are in the middle of the rally and it can carry on a little bit longer. Okay, let's look at the breakout of Nasdaq. Are you ready? This is something we've been waiting for around 3-4 weeks to hit that resistance and to pay attention, because if it's a breakout, it can drag Bitcoin into an all-time high easily. The breakout is insignificant and it's pretty annoying because, you could almost say that we close at resistance. Indeed, if we switch different symbols, different providers, some of them are below the resistance, some of them are a breakout, and that is what makes this a gray area still. So Nasdaq in here close at 59, below 58. In here is a breakout on the US tech. Another symbol, S&P, is a breakout on this particular symbol, which is on SP, on Amex, it's below resistance. So I will give it another week for confirmation of the breakout. And remember, these breakouts are not for entering a position. That's what retail does. And that's when liquidity is hunt. You enter there and then they drag you back below the previous range. You accumulate at the lows. And at this point, we observe to see if there's potential to hold for a little bit longer if you are on a swing trade. If you are an investor, you can watch other content because this is specific for taking advantage of the moves. So if you are in the money now, you're in the green and you're reaching this resistance, the analysis is focused on, can we carry on longer, or are we going to pull back and put new lows and enter into a bear market on the S&P? One thing is true, which is most of the big companies, the big tech, is responsible for these moves up. It's been like that for a while. Pretty much every time we go up is just Nvidia, Amazon, not Tesla, because Tesla is having a little bit more of a hiccup this week thanks to too much consumption of pills and stuff. Then you got Palantir putting new highs. So and look at Microsoft. Amazing. This is new all-time high. Meta about to put a new all-time high. So you see across the board, all tech are dragging everything up. Next week, we have the core inflation rate expecting an increase. We have PPI. So it's going to be a busy week with volatility starting from at least Wednesday. And very quickly, let's have a look at the alts. We are at 22, still Bitcoin season. We are just flipping in the areas where Bitcoin is the king. USDT dominance versus total free dominance is still in the area where we define whether we go into a bear market or we have another leg to the downside in here, which is bullish for the alts. Gray area, definitely. Others breaking down the first line of defense on the weekly, going a little bit too deep for this breakout that we had and started around March. USDT dominance rallying in a revenge rally, which should be good for the altcoins, but we are, thanks to this particular fractal from 2021, we are in an area where we are expected to see a bit more of expansion of USDT dominance, which is not bullish. Right after we get out of that area, possibly late June, if we repeat still the fractal, we could see another move down, which is bullish for the altcoins. So allocation around end of June is what the fractal says. Of course, if Bitcoin starts breaking all-time highs and it finds a new range and you are not already allocated in some altcoins, you're going to start chasing again and rinse and repeat. You get ripped again. Very quick reminder that 4 out of 5 ratios are saying that we are facing massive resistance. In a nutshell, against DXY, we faced just resistance and got rejected. This is the third time. So once it was at 73, once it was here, and the third is where we are. Against VIX, we are not facing yet resistance, so nothing to say. So that will be the 1 out of 5 that is not calling for a local top. Against the Federal Reserve, we just reached that resistance again. You can see it right there. Against the Nasdaq, we didn't reach the global resistance, where we reached a local resistance with this ascending white line. And against gold, intra-candle, we touched the resistance of the white line just like we did in 2021. But the story in 2021 says that after we did that, we have another pump for a second revenge rally in a row that put a new all-time high. So in here, unfortunately, we need to be prepared for either rejection or another revenge rally that can bring that second all-time high. Guys, if you want to trade Bitcoin or any of the coins in this list with $500 for free and you get to keep the profits of that, well, have a look at my position airdrop for Bybit. There's a link in the description. You click that link and then hit register to claim. Just make sure that you make profits. And there's still 2 days to go for my campaign on Bluffin. This one is offering up to 10,000 in rewards based on deposit and trading volume. You open an account with the link in the description on this non-KYC exchange called Bluffin, and in 30 seconds you can fund the account, start trading with leverage, Bitcoin and altcoins, win some of these rewards, and luckily you don't have to do KYC, so all of that takes literally seconds. Once you get your account on Bluffin, you head down to this QR code to validate that you have the Bluffin account with my link, and if you meet the requirements, you get all the indicators on Telegram and all the Pine scripts for free. Thanks so much for watching. I hope you did enjoy the Sunday Alpha. If you managed to make it to this point, it's probably because you already have finished all the beers in your fridge or you pass out. Either way, good for you. And I'll see you on the next one. Bye bye.